Okay, hello guys. My name is Mokgadi Selebalo, and I'm one of the debt counselors. I could say a professional debt counselors at Legal&Tax. So I've been with the company for a while now, and yeah, man, there's nothing much to say. Just I just love, I just love helping our clients and just being companion to our clients. So that is the most important things about our field
Mm.
is to actually make sure that our clients understand and they appreciate the assistance and the help that we're giving them all the time.
Of course, because it is a very tricky situation to be in. I mean, debt is no fun for anyone, so there's a lot of
True.
responsibility with you particularly. So we are
Yes.
grateful. And Mokgadi will be talking to us today about the culture of credit that has sprung up within South Africa. There were a couple of articles that accused the population of South Africa of having an addiction to debt. And in the article published this month on the same topic, it was discussed in terms of the fact that maybe it's not necessarily an addiction to debt, but an addiction to credit. And Mokgadi, as our professional debt counselor, is going to be unpacking what credit is, well, what's good credit versus bad credit. And we're going to be going through the key points that one has to consider. And this is going to be part 2 of our heritage and culture series. And this is looking at a newer culture as opposed to the more established heritages that we have and we'll be celebrating, particularly on the 24th of September with our Heritage Day, or very fondly known as Braai Day. So Mokgadi, would you like to take it away and let's start talking about credit?
Okay. Caitlin, like a credit, it's like a hierarchy.
Mm,
So you start with the credit itself. So to explain the credit in a name term is just a contractual agreement which a borrower actually receives something of value in return to actually repay that
mm,
with an interest. So it becomes a credit itself.
mm.
So once you have a credit, then that builds a credit history. So you start having a credit history. So credit history is just the measure of your ability to repay the debt and demonstrated the responsibility of you repaying them.
Mm.
So you now having all those two together. So for them to actually appear to someone else, there has to be a credit report.
Yeah.
So which our credit report is a detailed breakdown of your credit history, and it is prepared by credit bureaus. We do have many credit bureaus company, but there's
Mm.
also like 4 major companies whereby the most of the credit providers they use this. Right.
Yeah.
So once you have the report, because of the report, it has all your personal information and also it has your credit history on them. So there will be a credit score.
Mm.
So a credit score is a measure of an individual credit worthiness. So which is the credit bureaus collect all the financial information with other details, your personal information, which will be like your employment details, and also the inquiries that you've been making. And for them to create them, they have to like put them together into
Mm.
one information on the credit report so that the lenders can be able to use this information along with other details that they require to determine whether you are credit worthy or not.
Yeah. It's quite a lot of information to take in. Do you find that a lot
Yes.
of people know that, or do you have to explain that a lot?
You have to explain it a lot,
Mm.
especially in terms a person will just say, I don't have a lot of debts, but they say my score is very low.
Mm.
So there's also a dynamic behind that. And I think if we actually get into that, it will take us like a long time, but
Yeah.
just a few, a few tips. So having like too many debts or having just a few, like one or two,
Mm.
doesn't necessarily determine that you will have a good credit score or you will
Mm.
have a poor credit score. However, what determines a good credit score, firstly, it starts with the inquiry. because you might go to one creditor and you want 5,000 rand.
Yeah.
And Standard Bank decided to say, no, we can't give you 5,000. We can only give you 1,000 rand. So because of you want that 5,000, you will want to go to another. That itself, it affects your credit score. Simple as that, without even checking how do you actually service your credits or your debts.
Yep. I think you've really hit the nail on the head there, because that's when you're starting to take more credit to pay off your debt.
Yes.
And that,
Sure.
I think, is where this accusation of us having debt addictions comes from.
True.
So many of us have tiny incomes compared to massive expenditures. And I mean, I can't really think of another way that would happen other than relying on credit. And is that something that you've come across as well in your calls with people who need debt counseling?
Look, because of like immediately when you have a credit history, you automatically have debts, right? So we're just gonna start by explaining that debts. It's just the amount of money you borrowed by one party from another. So in most cases, you want to take those debts in order for you. It's either to buy something that you cannot actually afford it in a normal circumstances, right? Yeah. So immediately you're doing that, then you already have like debts in your hands. So you have the responsibility of servicing these debts on a monthly basis. Yeah. So it gets to the point whereby, for example, like South Africans, we've actually been accused of having debt addiction. And it's merely because of the tiny incomes that we have compared to the massive expenditures. And now, because of we have these massive expenditures, the only way to live the life that we cannot afford is through the use of credit facilities.
Yeah.
So we actually, eventually you actually get into this addiction that you actually didn't know where it started, but it's because of now the lifestyle that you want to live with the income that you receive cannot actually sustain the lifestyle.
And it's very difficult, because I imagine for you as a debt counselor, when you have to now explain to somebody that they might have to now take a slight knock in terms of the lifestyle that they're comfortable with, I imagine that's not always greeted with the most like welcome reception.
Sure.
It's a difficult job you've got, very difficult job indeed.
Yes.
And what about bad credit, in terms of like if you've got a good credit history and things like that, but what about bad credit?
Remember, there are two sides to credit. A credit can help us, and it can also hurt us, depending on how you use it. Yeah. So a credit can help us in an instance whereby you need emergency funds and you don't have like any money, or you can't actually afford it at that specific time. Yeah. Then you are able to take credit the credit that you know that you can be able to afford, and repay it faster as well, just to avoid the interest rates, and also just to avoid putting yourself into a serious debt, right? So that is a part of a good credit, which will also benefit you, because it can also be a good bet, especially if you actually repaying it quickly. So meaning that you're avoiding interest rates, right? So more so if you take credit, and that will be able to benefit you even after repaying it. For example, if you're taking a student loan, if you're taking a mortgage, if you're taking a business loan. So these are the things that you know that even after I've repaid my debts, I still have something. It means I can still use these instruments because of I have a business, or I have a qualification, or I have a bond, or I have a home because of the mortgage bond. Yeah. Right. So these are regarded as a good credit. So in most cases, this also, it actually gives you, how do I put it? It actually like make your credit history to be a very good one. because now you become a trustworthy client, whereby other credit bureaus, other credit providers, they can actually trust you with their money or trust you with whatever that you actually require from them. So immediately you have a good credit history, then this will actually help you to have a very excellent credit score. Nice. So once you have a very good credit score, then this will also help you to actually have a very, be able to get a lower interest, to get a lower interest rate when you're applying for credit, or when the time arises for you to apply for credit, because you are able to negotiate because of the credit history that you have and because of the credit score that you have, to say, look, 25% per annum, it's a lot. Is it possible for the interest rate to be lower than what you're actually offering? So you are able to actually negotiate on that.
That's fantastic. And I think a lot of people don't actually realize that, because interest rates are not something that we think of when we borrow money. I think we think we're going to borrow 500 Rand and we're going to repay 500 Rand. That don't necessarily, most of us, or let's not admit to that. I think some of us will think of the amount that is borrowed. And even when you're buying things on hire purchase, or if you are using a store card, as soon as you've got to pay money back, there is that little interest rate that's always going to be attached. And we always
it's always there all the time. It's always there all the time. For as long as you're using the money that is not yours, so you just know that you're paying interest rates. But it's a nicer with other ones, whereby they give you 6 months to say, if you pay it in 6 months, then it's interest free. So which is nicer that way. So if you're able to do that, then great. You know that you've actually scored a good bet on that one.
That's such an important point, because I think many of us don't necessarily take into account how long it might take us to pay back a loan. So if we take a massive loan, for instance, if it's one of those important ones like a mortgage to buy a house, there are things that happen in the future. We don't necessarily know what our employment status is going to be. We don't know if we're going to get a windfall. Maybe there will be money. Maybe there won't be money. So it's something that does have to be taken into account when one applies for that loan by you personally, not necessarily by the credit provider alone. But it's something that more of us do need to be aware of, because that interest rate can come back and it will bite you. And it's something, yes, of course, it's great to have, like you explained, about having a mortgage or a loan that has allowed you to have something when it's been repaid, that you still have something because of it. You've built a business, or you have a home, or you have a car, when there's something to show for it at the end of the day. That's definitely, I'd say, probably a very important thing to think about. But I think some of us do tend to take loans for, or take credit out for, things that don't necessarily last. And then where are you at?
True. I mean, look, that's when we get to the bad credit.
Yeah.
So a bad credit, it's an opposite of a good credit, because a bad credit is like borrowing money, knowing very well that there's no extra value after the repayment. So in that sense, which it sounds very straightforward in most cases, exactly that if you buy clothes and credit, there's no worth on that one. So you can buy your label clothes for 10,000 Rand, but repaying them, because of you've already worn them, probably you don't even like it anymore, or after washing them, they no longer have the same shape, and you put it in the wardrobe, but you're still paying that debt.
Yeah.
So which is part of the bad loans. But at the same time, more and more of South Africans are living on credit, and for them, it's like an ongoing thing.
Yeah,
it's an ongoing thing. It has them, but at the same time, a love-hate relationship that they do have with credit and with debts, or with accounts as well. So it gets to that point. So, and another thing again is just using a credit to pay off another debt.
Yeah.
It's a very bad deal. It becomes a bad addiction, whereby you can even risk to actually lose your goods in terms of reposition, because of now you actually didn't make sound decisions in terms of your finances and in terms of your credit as well. So this can actually hurt you badly when it comes to bad credit.
Yeah, because I mean, if you leave your debts unpaid, at some point you're going to need money, and that credit score and that credit history that you were talking about is not going to stand you in good stead with a reputable credit provider. So then you're going to end up going to a loan shark or mashonisa, and then we've got problems. So how do you as a debt counselor, like, how do you help people fix this? Like when you get into debt, what happens?
Okay, when you get into debt, you need to actually just seek help. You need to seek help firstly. And if you see, or if you are a member, even if you're not a member of Legal&Tax, let me not exclude the ones that are not members. So perhaps in future you can be able to join us and be our members. But as Legal&Tax debt counselors, we do assist our clients in terms of managing their debts, and we also guide them and assist on budgeting and negotiating with your creditors and assessing the ability to make the repayments plan, just while you're maintaining your dignified lifestyle. So obviously, not everybody can go under debt review, which also we do assist and we do advise with debt review as well. But there are those ones whereby we need to assess. We need to assess first to see if you need to go under debt review, or it's something that we can actually assist you to resolve it without you being under the formal restructuring, which is a debt review.
Yeah.
So once you have actually paid up all your debts, then credit bureau, it's very easy with credit bureau. Once you've settled your debts, then credit bureau will just update your credit profile accordingly, and they will close the accounts. If you had an administration on your name, or if you had a debt review flag on your name, or if you had a judgment on your name, there's no need, especially if you actually had a debt review or a judgment, there's no need for you to go to court to actually remove those off your name. Because credit bureau do it with the debt review one, you need to get the clearance certificate from the debt counselors in order for credit bureau to remove the flag. But with the judgment, as long as you have the paid up letter, then you are good to go with credit bureau. They just remove it instantly. Obviously, there is a time frame whereby the credit bureaus use a turnaround time for them to actually update one's profile. So it's really getting to this point when you're actually seeking help. It will assist you to eliminate a whole lot of things, because of now, in terms of you not being able to actually afford your debts, you tend to go back to the loan sharks. Remember the adverts where they will just say blacklisted, welcome.
Yeah.
So it's an indication that, you need to be very careful about it, because, I mean, it's too good to be true. How do you actually get credit if the most well-known credit providers cannot give you credit, but others are saying, no, blacklisted are welcome to get credit? So if it sounds too good to be true, then it's exactly that. Then you need to start being careful about it, because of loan sharks are not regulated. Immediately you take money from them, then they take risk measures, and their interests are illegal, and which they're also extreme, because you can pay the principal amount that you borrowed, you can actually pay 3 times of that amount. So it's very critical. So it's like they actually just trying to bleed you dry and take everything that we have, whereas you actually struggling and you are trying. But for you, by trying and going to loan sharks, you're actually making your situation worse.
Yeah, definitely. I mean, it's something that becomes very much of a debt trap at that point. And I think some of us have heard the phrase debt trap, but that's in essence what it really is the fact that one starts with a bit of credit and it starts out well, but at some point that balance tips and it goes from being something that contributes to a very good credit history, and when you are paying it back specifically, and then at some point those payments stop, and then the debt mounts, and then reputable credit providers are no longer interested in helping you. So it is sorry.
No, it's true. It's true. It's true what you're saying, because of immediately your reputation it's bad and you are not credit worthy. So meaning that reputable institution will not grant you loan or even extend a credit facility. So which is like inescapable, because of now, in order for you to be credit worthy again, you need to settle your debt. You need to make sure that you brought them to date, so that you can actually start building yourself again. And if you've been living on credit and can no longer repay your debts as per their contractual agreement, then that's when you need to seek help as well. That's where we come as debt counselors and also as debt advisors, because it's not only that we are debt counselors, we also debt advisors, because people get scared when you talk about debt counseling. They just think that you're going to put them under debt review. So it's not that, guys. So we are the debt advisors, and yes, we are professional debt counselors as well. So we will assist you in terms of managing your debts and the financial planning as well, so that at least, you go like you go to the road of recovery and be able to just recover your dignity, just get your dignity back in terms of debts and credit.
It's your financial freedom.
Yeah, your financial freedom. So if you fail to actually seek help on time, there will be like major steps that will happen. You're just gonna have to make matters worse, and credit providers will start taking legal actions. And once there's legal actions, then no one can be able to assist you. Even us can no longer be able to assist you, because of now there's legal actions at hand, especially if there are summons, then it becomes very difficult. So if you do not even respond on the summons, which the nicest thing about the summons, I cannot say it's a nicest thing because of they give you time, but at the same time, it's not the nicest thing to actually get to that point, because of now you are at the lawyers or at the credit providers' mercy in terms of whether they agree to actually get into an arrangement with you or not. So you don't want it to get to that point, because it can get to repossession of goods. So whereby now the sheriff will come and actually get your goods. So when it gets to that point, then it means that you've actually hit a rock bottom. Actually hit a rock bottom in terms of you saving whatever that you wanted to save, because of now, in order for you to retain that, there will be a massive repayment or massive amount that they will want as a once-off payment from you. And remember, if you cannot afford the debt now, where are you going to get that lump sum for you to actually regain the goods that they've taken?
That's terrifying. The lump sum is definitely something that needs to be a bit more. I think we need to be more afraid of it than we are.
No, true. Because if you can't get 5,000 now to pay that specific debts, so where are you going to get the 20,000?
Exactly.
To pay the same thing.
Exactly, and it seems. Sorry, carry on.
No, you can.
I was just going to say that I think that it's very important that any of our listeners, our attendees, and anybody who watches this later realizes that one can come to a debt advisor to get advice before it becomes a drastic or dire situation, so that you don't end up needing to go into debt review. And I think that particularly here at Legal&Tax, because we do try to be that companion to our members and our clients, is the fact that we don't necessarily just want to be there for our clients when they need us. We want to be that companion that's there before they need us. And in terms of financial planning and finance, you don't want to be really at rock bottom. Like, you would help before you hit rock bottom. So
look, remember, like things are difficult now, and our economy is not good. And obviously, even our income as well. Like there's retrenchment, there's salary cuts as well. So that also can actually affect you in terms of you actually making the repayments as per the contractual agreement. However, that is not the end of the things, because once you get to that point, once there's a salary cut, you still have to talk to the creditors. Don't be afraid to approach the creditors to saying, this is the problem I have. Show them proof and show them, obviously they will need a proof of income to see that indeed there is a salary cut. And credit providers, as much as we look at them as the devil at sometimes, but at the same time, they do also want to assist, especially if you are willing to pay and they see that there is drastic changes in terms of your income. However, many of us, we actually leave it until late. Until whereby I'm in areas for 6 months or I'm in areas for 3 months. That's when I'm like, I didn't pay my car, or I can't afford my car, and now I'm in areas and now they say they're going to take my car. Then it becomes a difficult thing, because of the minute you want to make an arrangement, they were like, some of them, they were like, okay, you need to start settling the areas before we can negotiate. So how do you actually negotiate if you have areas and they are not willing to even meet you halfway? So it gets difficult, because of when you negotiate with them before you can actually start having problems, then it becomes easier, because of they like, okay, let's try and do assessment. Some of them, they try and do assessment, especially if probably you've been with them for 2 years or you've been with them for like 12 months. They do an assessment, another assessment, to see if they can actually extend the terms, obviously, because of they still need their whole money with the interest, but also in order for you to afford on a monthly basis. And also, if you are not complying at the same time, that also, it causes problems, whereby then, at the end of the day, you get legal actions. And they will want to repossess your things. And repossession is something that no one wants to actually get to that place whereby their goods are taken because they couldn't afford to pay.
Absolutely. And I think that's important. People need to know that.
No, we just need to be mindful of ourselves and also be honest with ourselves, to say, if I cannot afford, then I need to seek help. The minute you're saying, I cannot be able to pay this, or I can't afford to pay this, or I don't have money to pay this, then it means you have a problem. Then that's when you need to start seeking help.
Absolutely.
And we, as Legal&Tax, we are here to assist as the debt counselors.
I could not have said it better myself. Mokgadi, thank you so much. That was very, very informative. And I think a lot of people are going to benefit from that advice, because it does seem to be about trust. And in terms of credit and dealing with credit providers, it's very much about trust. And the fact that one does actually have recourse, if one is honest, to go and explain to your credit provider that there's been a slight loss of earnings or a drop in income, and terms can be negotiated. And I think that's very important. And it's very empowering for a lot of people to know that they do actually have that control. So thank you.
Yes.
Thank you very much, Mokgadi Selebalo. Much appreciated.
Thank you, Caitlin, for inviting us.
And we look forward to seeing you again soon. But you're off the hook for the next one, don't worry. And thank you to everybody who tuned in. We're about to get load shed. So we just wanted to say thanks to all 7 of our attendees. Thank you so much for coming in. And we will be broadcasting next week on Friday. And the small things that one can change to improve one's quality of life, we'll be broadcasting with Dr. Avron Urison. So we look forward to seeing you then. Otherwise, we hope you have a lovely evening.
Okay.